Hold on to your hats, folks, because the global economy just got a whole lot shakier. President Trump has decided to slap tariffs on practically everyone. This isn't just a gentle breeze of protectionism, mind you. This is a full-blown trade tornado ripping through global markets and leaving a trail of economic devastation in its wake. Stock markets are plummeting, businesses are panicking, and even the usually stoic economists are starting to sweat. The message is clear. Trump's playing hardball, and he's willing to risk a global recession to get his way. Buckle up, buttercups, because it's going to be a bumpy ride. The first casualties of Trump's trade war, as always, are the financial markets. The S&P 500 has shed nearly $6 trillion since the tariff announcement. That's trillion with a T. The Dow Jones Industrial Average initially dipped a mere 0.84%, but then, on April 6th, it took the full plunge, plummeting nearly 350 points. Even the tech-heavy Nasdaq, which initially dropped a gut-wrenching 2.15%, couldn't escape the carnage entirely. But it's not just the US markets feeling the pain. The Nikkei in Japan is down 3%, while Hong Kong's Hang Seng Index has plunged a record-breaking 13.2%. Taiwan's stock market has also taken a nosedive, falling nearly 10% in its worst day ever. From Europe to India to the Middle East, markets are reeling, with investors fleeing for the perceived safety of government bonds. This isn't just a blip, folks. This is a full-blown market meltdown. So what exactly are these reciprocal tariffs, and who are they targeting? They're tariffs designed to punish countries that Trump believes are taking advantage of the United States in trade deals. China, as Trump's favorite economic punching bag, is facing the steepest tariffs, with some goods facing levies of up to a whopping 104%. The European Union hasn't escaped Trump's wrath either, facing a 20% tariff on a wide range of goods. Goods that were already in transit by midnight on April 9th are exempt, provided they arrive in the US by May 27th. Of course, this has led to a mad dash by importers to get their goods into the country before the deadline, creating further chaos in the global shipping industry. Trump has hinted at even more tariffs on the horizon, including major tariffs on pharmaceuticals. As you can imagine, the rest of the world isn't exactly thrilled about Trump's trade war. China has already imposed a 34% levy on a range of US goods, starting April 10th. Japan, South Korea, and Vietnam are all gearing up for trade talks with the US, but they're also preparing retaliatory measures of their own. The European Union is considering a range of countermeasures, including tariffs on iconic American products like Harley-Davidson motorcycles and bourbon whiskey. The message from the international community is clear. Trump's trade war is not a game, and they're not going to play by his rules. This tit-for-tat escalation of tariffs has economists worried about a potential trade war, which could have devastating consequences for the global economy. The big question on everyone's mind, of course, is whether Trump's trade war will plunge the global economy into recession. This trade war has already caused significant disruptions in global supply chains and has led to increased tariffs on a wide range of goods. The uncertainty surrounding trade policies is making businesses and investors nervous. And the answer, unfortunately, is a resounding maybe. The situation is complex and multifaceted, with many variables at play. Some economists believe that the trade war could be a catalyst for a broader economic downturn, while others think the global economy has enough resilience to weather the storm. Economists are divided on the issue, but there's no denying that the warning signs are flashing red. Key economic indicators such as manufacturing output and consumer confidence have shown signs of weakening. Financial markets have also been volatile, reflecting the uncertainty and fear among investors. JP Morgan has increased its recession forecast to a sobering 60%. This is a significant jump from their previous estimates and highlights the growing concerns among financial institutions. Goldman Sachs is slightly more optimistic, putting the probability of a recession at 45%. While this is lower than JP Morgan's forecast, it still indicates a substantial risk. Central banks around the world are already taking steps to cushion the blow of a potential recession. They are closely monitoring economic data and are prepared to take further action if necessary. New Zealand and India have both cut interest rates in recent weeks, aiming to stimulate their economies and encourage borrowing and investment, while South Korea has announced emergency measures to support its struggling automakers. These measures include financial aid and incentives to boost production and sales. These measures are designed to stimulate economic activity and prevent a recession, but it remains to be seen whether they'll be enough. The effectiveness of these policies will depend on how quickly they can be implemented and how businesses and consumers respond. Consumers, meanwhile, are bracing for the worst. Rising prices and economic uncertainty are causing many to cut back on spending, which could further slow down the economy. A recent Reuters poll found that a majority of American consumers expect prices to rise as a result of the tariffs. This expectation is leading to a decrease in consumer confidence and spending. If consumers tighten their belts, businesses will suffer, leading to job losses and further economic contraction. The ripple effects of reduced consumer spending could be felt across various sectors, exacerbating the economic challenges. It's not just economists who are worried about the impact of Trump's trade war. The ripple effects are being felt across various sectors, causing widespread concern. Business leaders, analysts, and even some members of Trump's own party are sounding the alarm. They fear that the ongoing trade tensions could lead to long-term economic instability. Jamie Dimon, the CEO of JP Morgan Chase, has warned that the tariffs could have negative consequences for the US economy. He believes that the uncertainty created by these policies could deter investment and slow down economic growth. Billionaire investor Bill Ackman went even further, calling the tariffs economic nuclear war. He argues that such aggressive measures could lead to a severe downturn affecting not just the US, but the global economy. Even Elon Musk, the CEO of Tesla and SpaceX, who is usually a fan of Trump's policies, has spoken out against the tariffs, advocating for zero tariffs on all goods. Musk emphasizes that free trade is essential for innovation and progress. Market analysts are equally pessimistic. They point out that the stock market has already shown signs of volatility, and the uncertainty is making investors nervous. Peter Cardillo of Spartan Capital has compared the current situation to the stock market crash of 1987. He warns that without a clear resolution, we could see a similar financial crisis. Kevin Gordon of Charles Schwab notes that there is a great deal of uncertainty among investors, which is never a good sign for the markets. He stresses that stability is crucial for investor confidence. Drew Mattis of MetLife highlights the challenges businesses are facing in trying to plan for the future in this environment of extreme uncertainty. Companies are finding it difficult to make long-term decisions. The message from the experts is clear. Trump's trade war is a dangerous gamble that could have dire consequences for the global economy. The stakes are high and the potential fallout could be devastating. Trump, of course, remains defiant. He has always portrayed himself as a master negotiator, someone who can bend the rules and come out on top. His confidence is unwavering, even in the face of mounting criticism and economic uncertainty. He continues to defend his tariffs as necessary to protect American jobs and reduce the trade deficit. Trump argues that these measures are essential to revitalize American manufacturing and bring back jobs that have been lost to overseas competition. He has dismissed concerns about a trade war and a recession, arguing that the US economy is strong enough to weather any storm. According to Trump, the short-term pain is worth the long-term gain, and he believes that the American economy is resilient enough to handle the pressure. "We are playing with a very strong hand," Trump declared recently. His speeches are filled with optimism and a sense of invincibility, as he reassures his supporters that his strategy will ultimately prevail. But many experts question whether Trump's aggressive tactics will actually achieve his stated goals. Economists and trade analysts are skeptical, pointing out that the global economy is interconnected and that such unilateral actions could backfire. They argue that tariffs are a blunt instrument that will ultimately harm American consumers and businesses more than they help. The increased costs of goods could lead to higher prices for everyday items, affecting the average American's wallet. They also point out that tariffs are unlikely to force China or other countries to make significant concessions on trade. The complex nature of international trade agreements means that such issues cannot be resolved through simple measures. Tariffs are a tax on American consumers, said Howard Lutnick, Trump's Commerce Secretary. He has been vocal about the potential negative impacts of these policies on the American economy. Lutnick, like many others, believes that the best way to address the trade deficit is through negotiation and cooperation, not tariffs and threats. He advocates for a more diplomatic approach to resolving trade disputes. He has urged Trump to reconsider his approach and work with other countries to find a solution that benefits everyone. The path forward, according to Lutnick, lies in building alliances and fostering mutual understanding rather than escalating tensions. Trump's trade war has brought the world to a fork in the road. One path leads to a future of increased protectionism, trade wars, and economic nationalism. The other path leads to a future of continued globalization, free trade, and economic cooperation. The stakes couldn't be higher. If Trump continues down the path of protectionism, it could lead to a global recession and a breakdown of the rules-based trading system that has underpinned decades of economic growth. On the other hand, if Trump changes course and embraces free trade, it could lead to a new era of global prosperity and cooperation. The choice is clear. The world needs to choose the path of free trade and cooperation. As the dust settles on Trump's latest round of tariffs, one thing is clear. The global economy is in uncharted territory. The rules-based trading system that has governed international commerce for decades is under threat, and the consequences of a full-blown trade war are too dire to contemplate. The markets are jittery, businesses are uncertain, and consumers are bracing for the impact of higher prices. The specter of recession looms large, and even the most optimistic economists are struggling to find a silver lining in this storm cloud of protectionism. The coming months will be crucial. Will Trump continue his aggressive tactics, risking further escalation and economic turmoil? Or will he heed the warnings of experts and world leaders and seek a negotiated solution? The fate of the global economy may very well hinge on his decision.